Hey guys, Tony Denaro, breaking news on Sunday night. In case you haven't been paying attention, we have yet another bank failure, and the Federal Reserve and the U.S. Treasury just issued a press release an hour or two ago saying that they intend to make sure that all account holders at these banks are taken care of. Let's get right into the details. By the way, if you didn't catch it, I did have a great live YouTube video this morning with markets with May. She is very well versed in all of this banking stuff. We went over 90 minutes of your questions and answers. So go up to my tab there where it says live if you missed that this morning, and be sure and check it out after you watch this video. Last week, we already knew about Silvergate, the bank that was heavy into crypto. And then on Thursday and Friday, we started having the failure of Silicon Valley Bank. This weekend, we had yet another bank fail, and the name of that one was Signature. They're based out of New York. Another bank that is heavy into crypto. And you saw today, this weekend, crypto, especially the stable coins, under a lot of pressure. They are recovering at the moment, and the pegs to the $1 mark on many of these stable coins have pretty much returned to normal. It's going to be exciting to see what happens tomorrow. But let's go through what we know tonight, Sunday night. All right, I'm going to keep this short and sweet and tell you what I know as of right now. Feel free to ask questions down in the comments. I'm sure I'm going to be sleeping with one eye open tonight to keep an eye on the futures and what is going on. U.S. government steps in and says people with funds deposited at Silicon Valley Bank will be able to access their money. Moving down to the bullet points here, regulators approved plan Sunday to backstop both depositors and financial institutions associated with Silicon Valley Bank. I'm going to walk through all of this with you and explain it as quick as I can. Don't worry, we're not going to be here a long time. Officials will unwind both Silicon Valley Bank and Signature Bank, the new one that we found out about today, ensuring that all depositors, even if you're over the $250,000 FDIC insurance, will have full access to their funds on Monday. That does not mean that these banks were bailed out. These banks are still failed banks. They are done. Now that could change. They could find a buyer, but as of right now, tonight, as far as I understand, these banks are done. Silicon Valley Bank and Signature Bank have both been shut down, and they are now being controlled by the FDIC. FDIC will reopen them Monday. Let's talk about how people are going to get their money. According to Bloomberg, both insured and uninsured deposits will be made available. Let's go down to the key paragraph here. It does say that regulators spent the entire weekend trying to find buyers for these banks, another bank maybe to take over the assets and the liabilities of these banks. There wasn't enough time, and they didn't want a panic to hit on Monday, so they invoked a Depression-era rule, a so-called systemic risk exception, allowing the FDIC to insure uninsured deposits. And that is going to go in place both for Silicon Valley Bank and Signature Bank. Is this a bailout? Not really. Why? Because shareholders in these companies, if you own stock in these companies, you are not going to be bailed out. These companies are, as of right now, failed banks. Also, unsecured debt holders, investors in these companies that had unsecured debt, are not going to be covered. So I would not call this a bailout. I call it a account holder protection plan. And I know you're asking, okay, well, who's paying for this? Is this on the taxpayers, or who exactly is paying for it? But it does say here in a joint statement by the Treasury, the Federal Reserve, and the FDIC that any losses to the deposit insurance fund to support uninsured depositors, uninsured customers of these banks, will be recovered by a special assessment on banks as required by law. So the banks are the ones going to be paying for it, but you kind of know what that means, right? Because who gives the banks money? They're going to find some way to pass it on to the customers. So are the taxpayers directly paying for it? No, not really. Indirectly, I guess you could make that argument. You can see here on the USDC chart that crypto prices on the stable coins are starting to recover. It's just about back up to $1. And all of the cryptos you can see on the far right here that had been having major rundowns during the day are starting to recover at the end of the evening here. All the U.S. futures are green as of this moment. What is it? About 10:30, 11 o'clock at night here in Central Standard Time. We'll cross our fingers and hope that we wake up to good news in the morning, and that the people feel a little bit more confident, and that these bank runs stop. This has been a lack of confidence. The Asian markets are mixed at the moment. I am Tony Denaro. I will be keeping an eye out on this tonight. If you have any questions, drop them down in the comments below, and I will see you guys tomorrow.